Hello and welcome to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. Well, we're sitting here on Sunday and we've had quite a rally. I'll show you a few things going on chain that have me scratching my head, and we'll point out what to watch for this week as we look to break the all-time high for Bitcoin. If you're enjoying my content, please give this video a thumbs up and be sure to subscribe to my channel. I want this to be the best place on YouTube for on-chain analysis, and your support means everything. Without further ado, let's get started. We will start, as usual, with the price chart. When we spoke the other day on October 13th, we were right here. We were hanging out under 60K and building support. And we, in fact, were right between our key Fibonacci levels of 702 and 786 here that we had been watching closely for the last few weeks. Well, now we have cleanly broken above that after finding support, and we're sitting around this low 60K area waiting to break the all-time high. This is an interesting place from a trend line perspective. I don't always draw trend lines, but there are some compelling ones here. Get this one on here, got this one here, we've got this one here. So this trend line here really started in 2020 and we got a bounce, and we can see earlier this summer during the sell-off, this trend line kind of caught support, and for a while it looked like we were going to hold it, but we ultimately broke below, and it acted as a roof in August and September as we were rallying. We're now coming back up to this level, and you can see the top of it is now right around the all-time high at 64K. Bitcoin is not always respectful of trend lines, but they're important to look at now and then to get an idea of how price is moving in relation to past trends. You can see here, this is also maybe a questionable trend line. I mean, every trend line is a bit questionable, but you can see price has a tendency to kind of respect these levels. So, I don't know, something interesting to look at. Ultimately, the bellwether for me is the fact that we broke these Fibonacci levels here. These are very important. These make or break crypto rallies all the time. So this is great to see. And we know that we're probably likely to look for support here for a few days before breaking out. We switch over here. I've marked some of the previous all-time highs. And you can see here, when we tried to break the all-time high from 2017, there was a bit of indecision and we had to build some support before finally breaking through it here. This was a series of days. And if we go back a little further, here in 2017, when we were breaking the 2013 top, there was also quite a bit of chop and indecision, broke over it, broke below it, before finally catching it and moving away. So I wouldn't be surprised to see a little bit more of that up here. You know, maybe we kind of chop around a little bit before catching support and moving up. Something to keep an eye on over the next few days. But as we build support here, there's also a lot of activity happening on chain. So let's hop over there and see what we can find out. First, we'll look at our realized price distribution. This is a beautiful look of the current distribution of all Bitcoin. This gray bar over here on the end is where we are right now, and there's only about 0.5% of all Bitcoin sitting at a higher price than where we are at this moment. More than 99% of all Bitcoin has a lower cost basis than today. This is significant because holders in profit are less likely to sell. Feels good to be in the green. There's less pressure to get rid of your coins and exit the market. It makes it easier to sit back and observe the market when you're already in profit and you don't have anything to worry about. We can see the way that this volume has moved. So this was the 13th, right? This is the last time we spoke and looked at this chart. And over the days since then, you can see the way the volume kind of moves around here, consolidating and then eventually being spread up into these higher prices as we broke out. Here was yesterday, now landing on today. The realized price distribution is not a gospel. This isn't going to show you precise support and resistance levels, but it's showing you coins changing hands. It's showing you that there's a lot of activity up in these levels and a lot of interest. And we can also see that the vast majority of holders no longer sit in the 60Ks. Anyone who was left in this area from earlier this year has had many opportunities to get out, and most of them have. They've sold their coins to other more willing buyers who now sit in profit, who bought down here in the summer at a lower cost. So we know we have all these holders in profit. We know we've got all of these Bitcoin sitting at lower prices. Are any of them being spent? Let's find out. Here is the spent output profit ratio, SOPR. This is the profit ratio of every coin that is spent on chain. Coins that sit dormant do not show up on this chart. This is only spent coins, only coins that are moving and changing hands. And the key observation from this is the low level of profit taking we're currently seeing in this rally. We're now back up to virtually all-time highs. And the level of profit taking, the level of spending coins in profit to realize gains, is still on the lower side. It's kind of down here when we were in the very early bull market of late 2020. If I zoom out a little more so you get more of an idea of what high and low values looks like. I mean, even over here, this isn't even breaking all-time highs. This is just a rally from the depths of the 2019 capitulation. And even this has higher levels of profit taking than we're currently seeing over here in the 60Ks. There's just simply not a large amount of holders looking to move their coins yet. We know this will happen as we get back to all-time highs. New prices, new highs, always find new willing sellers. But it seems that very few are jumping the gun. There's a conviction amongst these holders to wait for higher prices. There's been a bit of acceleration of the profit-taking ratio in the last few days as prices going up. This is kind of a natural byproduct. So the fact that it's going up on its own is not a sign of elevated profit-taking, especially when you compare this level to what it looks like when coins are actually being sold to new buyers in mass. We get these big spikes, and they don't sustain for long periods, but there's a lot more volatility in this metric than we're seeing right now. Maybe in the coming days, if we finally break 64K and we start moving up towards 70, we start seeing some spikes here. That will be expected, and we'll need to make sure that those taking profit are not causing overhead supply on the market and pushing price back down. In tandem with this chart is another view of the way supply is moving, and we can get an idea perhaps of where some of these coins might be coming from. Here's our realized cap HODL waves. In a previous video, we walked through how this chart works, and I'll leave a link in the description for you to check that out after this one if you'd like. So this is the distribution of coins separated by their age in these colored bands and weighted by their realized value, weighted by the dollar value realized on chain by these various supply groups. A new coin, a coin that was freshly spent, has its lifespan reset to 0, and it's part of these 24-hour group down here at the bottom. As coins age and mature, as they sit dormant, they eventually graduate into these higher, more senior bands. This bottom band is 24 hours. This next red group is 1 day, 1 week. Then we have 1 week, 1 month, 1 month, 3 months, 3 months, 6 months, and 6 to 12 months. And it goes up beyond that, but I've turned off these higher groups. We're only looking right now at coins that have been realized in the last year. We can see by the way that this top of this group has kind of flattened out here that this is a relatively contained portion of supply. This is pretty much all coins that were moved in the last calendar year and nothing else. By the way this top group is belling out and expanding, this is the 6 to 12 month group, you can see that they are absorbing coins from these lower bands. Quite a bit of supply is aging and maturing across the 3 to 6 month threshold into the 6 to 12 month threshold. 6 months ago today was April 17th, 3 days after the all-time high. So people who hold coins from this group, many of them are standing pat, and those coins are aging into the 6 to 12 month group. But what I have noticed is that down here in these younger bands, we've seen a little bit of a spike up. You see this? You see how each of these groups is beginning to spike up here? That's because there were some coins that were spent from older hands that joined these younger groups down here. And they're now maturing, and eventually they'll move into 1 day, 1 week, 1 week, 1 month, and they'll start the process over again. So we've got this oldest group here maturing and growing and absorbing supply. And we also have these younger groups here growing and absorbing newer coins. So where are these coming from? Well, if I look here, it seems that most of them are coming from this 3 to 6 month group here, which is right in the middle. Some portion of these coins are staying dormant, they're being hodled, and they're maturing into the more senior group. But another portion of them are being spent. See the tapering here on both sides recently for this particular age band here. Coins are leaving this group. Some are going up here, but some are joining the 24-hour bucket down at the bottom. These folks, these 3 to 6 month folks, they bought between April 17th and July 17th. These people bought in the absolute depths of the market. They bought from here to here. in the saddest and scariest part of this entire year. Many of these folks are now exiting near their cost basis or at a slight profit from where they got in. This isn't any kind of red flag for me, and I don't bring this up to make you nervous that old hands are selling. These aren't particularly old hands. These are kind of medium age coins. They're between 3 and 6 months old. And we know, as we've spoken about in previous videos, that when coins get more than 5 months old, they become statistically unlikely to be sold anytime soon. 5 months is our 155-day cutoff for coins becoming part of long-term holder supply. So folks who have coins in this group are walking the line between becoming hodlers and becoming panic sellers. We can see a few of them are joining the ranks of the hodlers, while a few others are seeing this as too risky for them, and they're exiting the market at a slight profit. And that is what we're seeing manifest itself over here in this relatively muted spent output profit ratio. So the takeaway here, some coins are moving, a few of them are in profit, but most of them right now appear to be from April to July. Not true hodlers, newer market entrants who just want to get out. They weathered a lot of FUD, and they waited for their moment. And if this isn't for them, that's fine. The rest of us will buy their Bitcoin. Something else I want to touch on for this rally is based on this 90-day coin days destroyed chart. We did look at this once in a previous video, and we're bringing it back now. Every day that a coin sits dormant, it acquires 1 coin day. If I had bought Bitcoin on October 17th of 2020, and I was still holding it today, it would have acquired 365 coin days. When that coin is moved again, sold to another buyer, all of its coin days are destroyed. So the longer a coin sits dormant, the more days are destroyed when it's moved again. And likewise, many days are destroyed when many coins are moved. So this is a good barometer for general network activity and froth. It also lets you know when older coins are on the move. Right now, Coindays Destroyed 90, which is just a 90-day average of this value, is on the very low end. When Coindays Destroyed 90 is on the low end, it tends to be in bear market accumulation. When there's very little transaction activity on chain, in those instances, Coindays Destroyed sits very quiet, and it can stay this way for months. As prices appreciate and we get closer to breaking all-time highs again, usually this value picks up dramatically as older coins come to life, as older hands look for exit liquidity and profits to realize. This has been true in every market so far, and it was true in 2020. Here is that same chart, but with some annotations to make it easier to see what I'm talking about. This dotted line shows you where price broke a previous all-time high, and the star is where Coindays Destroyed 90 was at that time. Here in 2013, when we broke the 2011 top, Coindays Destroyed 90 was elevating, and it was climbing out of this kind of blue baseline area before spiking heavily into the rally. These are old coins moving en masse. Same thing here in late 2013. We go to break the high again, Coindays Destroyed 90 takes off again. Same thing here in 2017 and in 2020. Each time we break the all-time high, Coindays Destroyed is elevating. Older coins are coming to life, more activity is occurring on chain. This is the pattern. Curiously, we are now within about $2,000 of the all-time high, and Coindays Destroyed 90 is at the bottom of the chart, one of the lowest levels it has been at historically, meaning that this run up to the all-time high is the quietest in the history of Bitcoin. So there's a couple of factors here that I think could be at play. One, higher prices mean you have the luxury of selling less Bitcoin in order to realize profit. That's one theory, but this doesn't vibe with the very quiet spent output profit ratio that we broke down a few minutes ago. So we know there's not a ton of profit taking going on. Another theory is that we are witnessing Bitcoin's store of value properties emerging at scale. We are seeing more and more holders of Bitcoin be unwilling to move their stacks. They see it as a store of value. They see it as a long-term hedge against inflation and currency debasement. And they understand that 65 or 70,000 is probably not the ceiling for this asset over the long term. I don't mind Bitcoin being under the radar. If we can break the all-time high without retail even showing up, then the chances of a sustained rally when retail does show up has increased significantly, in my estimation. The fact that we have given weak hands so many opportunities to exit this market means that we don't have very many of them left. There have been numerous opportunities this year for folks to exit at break even if that's what they wanted. We have been chopping around in an eternal 30 to 50K range for months. People who didn't want to be in Bitcoin had a chance to leave. And the only folks that are left in mass are those with confidence. And they're just not moving their coins here. A theory that we've talked about on this channel many times is how this market could be similar to this 2013 and 14 double move that we got. And if that's the case, this fractal would have to be similar to this one, right? In proportion and distribution. It's clearly shorter than this one, and this could be a byproduct of not needing to move as many coins because of higher prices, that theory that we talked about. So we may be seeing permanently lower highs on this chart in general, but even in this double move market, the value of coin days destroyed, the activity began rising before we broke the all-time high. It started rising down here, and we're still nowhere near that level. We're still well below this level. So I find this to be a very intriguing and curious development that I'll be monitoring in the coming days. Will we see more coins come to life with older ages? I imagine we will, but I don't know at what scale it will happen. Quick check-in with our entity-adjusted activity. We've been talking about the low amount of coins moving on chain. Well, the amount of participants each day in transactions here in this blue line is increasing, and the number of transactions is increasing. However, old coins are not part of those transactions, as we just looked at on the 90-day coin days destroyed. So this is a positive development. More activity, more people interested in Bitcoin, still not high levels of profit taking. Additionally, here are the balance of BTC across all exchanges. This value has been declining consistently since early 2020, but even here in this rally, it remains flat. The balance has not really increased since this moment here in late August. This was the last time there was a notable inflow, net inflow to exchanges, right here on this initial rally out of the depths of the summer bear. This was when people still thought we were in a dead cat bounce and that price was going to roll back over. A few folks put their coins on exchange and got out. They rode this sideways crab market for a few months here, and as soon as we got out of it, they left. And since then, all those coins were then taken away and put into cold storage. And this balance has been flat here since mid-September. This is really impressive to me. We're seeing price going up. I mean, we've gone up over $1,000 a day in the month of October, and this hasn't hardly moved at all. Any new buyers showing up to this market are fighting over less and less available coins. There's currently less than 2.5 million Bitcoin sitting on all exchanges. That's only like 12% of the total supply. This value can change quickly. The fact that coins aren't on exchange now doesn't mean that they can't be put on there and sold in the same day. So when we see quick inflows, it's something to keep in mind. But you can see, as we've been rallying here, this value has yet to move in any notable direction or any significant amount. And I think that this just really speaks to people's confidence in Bitcoin and how unwilling they are to spend right here. Really supporting this view of low coin activity from 90-day coin days destroyed, and this view of low profit taking. All three of these metrics are really emphasizing a low amount of old coin activity and willingness to sell. Here is long-term holder supply. This is the supply held by all Bitcoiners that have had their coins for at least 5 months. Once a coin sits for 5 months, or 155 days, the statistical likelihood of it moving on a given day drops significantly. They become much more likely to stay HODLed. Zoom in on the recent price action. All summer, we've been documenting the rocket ship rise of long-term holder supply, and just recently, we're starting to see the rate of change of this growth smooth out a bit. It's not turning over, it's not flat, it's still increasing, but it's increasing less so. This makes sense. We're very near the all-time high. This is typically when long-term holder supply begins to distribute, begins to turn over and start coming down as we break into all-time highs. Look, This is what happened here. If I zoom out so you can see this level, this was the previous all-time high here. And as we began to break this, really long-term holders started selling long before. They started selling here as we broke this high because we had this kind of mid-cycle peak here. So we started to break this level. This was where long-term holders started selling. And then as we got over the all-time high, the previous all-time high, it accelerated a bit more until it hit this basin and they started accumulating again. So we're seeing this begin to smooth out as we're getting close to the all-time high, but it hasn't rolled over yet. It hasn't begun net selling. It's something to monitor closely in the coming weeks. As we break 64K, will this group remain strong or will they start dumping onto the market? If they start to sell, we need to see significantly more buyers, or I believe the rally will run out of steam quickly. Because while we're seeing increased amount of active entities, we're seeing a bit of elevated volume on chain, the retail euphoria that really drives price discovery has not arrived yet. The news cycle doesn't even know that Bitcoin is about to break the all-time high. No one is talking about it. Retail interest can show up quickly, and perhaps it will happen this week. A futures ETF was officially approved, and it looks to begin trading on Tuesday. That could be a boon to the news cycle in general about Bitcoin, but also we'll probably see an elevated amount of spot activity by hedge funds who are collateralizing and hedging their futures positions. So while we're seeing increased active entities, increased transactions, and low amounts of old coins being sold, we are seeing long-term holder supply begin to slow down. It hasn't rolled over, but it's slowing down. And if this group thinks that it's going to realize profits in the high 60K price range, if that were to happen now, I would not have confidence in a continued price rally based simply on the amount of demand volume that exists at this moment. We just don't have a lot of buyers. The main reason we've been able to rally is because we have almost no sellers. The current hodlers are not willing to let go of their Bitcoin. So we need to keep an eye on that dynamic in the next few days to make sure it isn't shifting underneath us. So just to be clear, I'm very bullish on this rally overall. I still have high confidence that we will be seeing new highs in the next month. But if I am being objective, if I am being fair in my analysis of the market, we still do not have increased retail buying demand. And I don't expect it to have already arrived. That usually arrives when we hit new highs. But as we've seen in the past, activity usually is picking up by this point. So we're seeing more transactions, we're seeing more active entities, but we aren't really seeing casual retail showing up and marketing in, FOMOing in. Will that come the moment we hit 64K? I don't know. I'll be watching closely. I would be remiss if we did not talk about the futures market today after the developments of the past week. Late last week, a futures-based Bitcoin ETF was finally approved by the SEC and looks to begin trading sometime this next week, maybe on Tuesday. In anticipation of this news, futures volume and open interest has been rising all week. If we look here, the volume in the perpetual market is over the September 7th high and is now at a level last seen in late April. You can see here just how aggressively this volume has been going up since October started. Likewise, the funding rate has been increasing, and you can see it's still nothing compared to some of these higher levels we saw in the spring of this year, but we may never see these kinds of levels again. It's hard to say. Many of the leverage options that were offered by exchanges back in this time are not available anymore. There were some 100x and 125x leverage options, which is just crazy to me, honestly, that places like Binance were offering, and they don't offer them anymore. I believe the maximum now is around 20x leverage. So it's likely we won't see this amount of aping going on again, but regardless, it is elevated. It is in similar places to where it was in September, and this was the flash crash on El Salvador's Bitcoin Day. This next week could be a choppy one. I would not be surprised if we test the all-time high and see an immediate rejection of it, not unlike September 7th. There's just a culmination of factors here that make this more likely in my estimation. We've got high futures volume going up dramatically. We've got a high funding rate, and we have low amounts of on-chain activity relative to a bull market. We have noted in previous videos that on-chain transfer volume has been elevated in recent weeks, but we're not yet seeing that manifest in a spike in transaction counts or a spike in active entities. Those things are rising, but they haven't risen at the same amount as the volume of dollars moving on chain. So it seems there are some larger players moving behind the scenes, which is interesting, but won't help to carry a sustained rally. For that, we need casual interest. So if we test the all-time highs this week on euphoria over the futures ETF approval, and we get a few holders looking to realize profits at new prices, if enough of them show up, there might not be enough demand yet arrived on the scene to pick up their supply. These are two forces working against each other: the supply put on the market and the demand to take it off. And we're at a key junction in this market cycle where these forces are about to come to a head. And it's a matter of which one shows up first and at what size they arrive in. All right, that is where our rally currently stands. We have a low amount of profit taking, but behind the scenes, there seem to be larger players getting involved, but we're not yet sure where they're coming from. The futures ETF is set to go live this week, and it could bring a new kind of volatility to the market. If it pushes price up quickly and we suddenly find ourselves at the all-time high, there will be some folks looking to sell. And what I'll be watching closely is at what point casual retail demand shows back up. The newbies and normies that ignore Bitcoin when it's in a bear market will come back when it reaches all-time highs. And those are the people we're waiting for. Make sure you follow me on Twitter at TXMCTrades. I post a lot of analysis and observations, many of which don't make it into the videos. You can also interact with me there, ask questions about the charts we talk about, and it's a good place to see other content that I'm producing that isn't on YouTube. If you have any questions or feedback about this channel, please leave them in the comments. I read every one of them. We're in exciting times, friends. We weathered a summer of FUD, and now we are looking to have a fall rally into the all-time high. On-chain still looks strong, and we're waiting for an increase of demand to arrive and pick up what will be available supply at new prices. We'll check back in the middle of the week and see how the rally is going. Likely on Wednesday or Thursday. I'm still trying to figure out the best content schedule for this channel, but I've been putting a video out every 2 or 3 days pretty consistently. Take care of yourselves, friends. Be kind to each other. We will speak again very soon. Cheers.